And let's talk Forex now. And Trish Louis is here for a take on the Forex scene. Trish, the dollar rose last night against most major currencies. Safe haven buying, or is there more to it than that?
There was more to it, well, the dollar index yesterday rose 0.4%. Yesterday it was the most in a week. There were a series of factors that led to, aside from the risk aversion, that led to profit taking on all these emerging and commodity currencies. Well, first off, of course, we have the weaker than expected U.S. consumer confidence, which showed an expected drop, and the UK GDP as well. That contracted the most since 1958, and the sterling was sold off sharply against the dollar and the euro. Bearing in mind that sterling had a very good run, so traders actually looked for excuses to actually take some profit off the table in the sterling. And then there was the oil price decline hedging, which led to the stronger dollar. And there were also talks of a half-year end and a quarter-year end repatriation of funds back into the U.S., which led to the stronger dollar. And finally, we had the IMF data, which showed that the U.S. Dollar's share of the global foreign reserves actually rose to 65% in the first quarter from 64.1% in the fourth quarter of last year. Traders actually expect that the stronger dollar sentiment could continue, simply because the market's in a more cautious mood right now, with the long weekend ahead in the U.S. and a slew of data out of the U.S. and Europe. In the next 48 hours, we have European PMI, U.S. inflation, and the U.S. manufacturing tonight as well, and not to mention the all-important U.S. non-farm payroll on Thursday.
Of course, all morning we've been talking about the Tangkan fell short of expectations. What's been the reaction on the yen so far?
It was a bit mixed. Initially, the yen actually strengthened because people say that, the Japanese economy was actually, could be beating the U.S. in terms of pulling itself out of recession, because the Tangkan actually showed that second quarter outlook was actually better than first quarter. But now the currency is weakened slightly. Now traders are looking on the other side of the coin now, saying that it was higher than the first quarter, but it still fell short on expectations. So it just goes to show, traders said whatever it is, it just goes to show markets very sensitive for any signs of disappointment in data, and they're probably going to be reacting more to that than any positive upside surprises, at least for the next 48 hours.
Okay, Tangkan's out. I'm guessing that the market will be looking at the non-farm payroll that's coming out of the U.S., correct?
Yeah, but ahead of that, that will be tomorrow. But ahead of that, there's more tonight as well. We have European PMI numbers and CPI numbers. And then this morning in Asia, the Chinese PMI just came out this morning. It was up the fourth month in a row. But as we can see, the currencies that are sensitive to China, including the Australian and Kiwi dollar, hasn't really rallied. Like I was speaking earlier, traders do seem a lot less sensitive to any positive upside surprises than to negative numbers, and expect that could continue to be the theme, at least for the next 48 hours. Back to you, Trish
Louis, thank you so much for that.